friends. This side Rahul Magan here as a Group Chief Executive Officer Treasury Consulting and also a venture capitalist. As we speak on 4th April 2021, Treasury Consulting Group launched the first set of videos covering the penny stock video course and our very recently launched currency futures trading video course would be coming probably this week anytime soon, and we would be launching a lot of video courses as early as possible. Today I would be covering a very important topic on Indian IT industry. Everyone understand that I spent 10 years of my corporate career in IT industry, so I understand IT industry very well. I spend a very humongous amount of time with ITES players, information technology enabled services, and hardcore IT players. Indian IT companies are far below than what we are having global IT companies. Example Apple, Accenture, Cognizant, Microsoft, Google, Facebook, and all. The level of quality and innovation in Indian IT companies is far, far, far lower than what you have in the international IT companies. Another issue with the Indian IT companies is that Indian IT companies are sitting with huge headcount, while the international IT companies, example, if you take the total headcount of Apple and just compare the headcount of Infosys, HCL, Wipro, and TCS. That is one thing. Another important thing is that nowadays the foreign institutional investors and foreign portfolio investors are actively participating in India. According to a magazine, in the last 1 year, foreign institutional investors and foreign portfolio investors invested around 1 lakh crores. By the way, 1 lakh crore is really a big amount in the Indian equity markets. And several mutual funds, I don't know, willingly or unwillingly, they are actively holding the Indian IT stocks. I divide Indian IT stocks into three parts. Number one are the top leaders as per the market capitalization, because equity market go as per market capitalization. That's a separate thing, that market capitalization is one of the wrongest way of taking decision. It might possible that you are investing in a company who is holding the highest market cap compared to an investor who is investing in a company who holds the lowest market cap. That doesn't mean that if you are investing in a highest market cap, you would get a higher return, or somebody who is investing in a low market cap will get no return. But yes, the paid and sold media, including the print media, always predicting or always trying to give their research to large caps. And they always saying that the companies who hold the large maximum cap, large market cap, are always having better chances of growing than the companies who holding the low value cap. And I tend to deny with this in an open forum several times. From the angle of large cap, all four IT companies, which is Infosys, TCS, Wipro, and SCL, they grew, except Wipro. Fundamentally speaking, Wipro is a good company with the annual sales of around 50,000 crores. I think Wipro comes third. The first come the TCS, followed by Infi, then Wipro, then HCL. You can check again. Now the important thing is that Wipro, if you look at Wipro intrinsic value, basically the intrinsic value of the Wipro stock, compared to the two latest M&A, which is merger and acquisitions they recently did, I think Wipro is really a good opportunity. But unfortunately, we all understand that the media and the paid and sold print media are really give any kind of clarity on the intrinsic value. If I look at from the angle of revenue, then I think that Infosys is also not very far from the intrinsic value. Of course, it is far from intrinsic value, but not very far from intrinsic value. While HCL, which is currently around, I think very closer to 1000, is having a great prospect as well. There is another category in the Indian IT industry, which is nothing but the mid mid IT stocks like Emphasis, Sustain Technologies, and there are multiple mid IT stocks. Unfortunately, effective pandemic, which is December 2019, I have seen a humongous activity of institutional investors in mid IT stocks the than the large cap IT stocks. Example, Emphasis. Many institutional investors or the top venture capitalists and the private equity, they invested in some selective mid-sized Indian IT companies. If you compare the revenue of these IT companies, you will see that their revenues are not even on the left and the right hand side of the top Indian IT companies, but their share price is far beyond than the top Indian IT companies. So what I see is that the investors needs to be very alert from the angle of intrinsic value. I'm not naming any mid-sized IT company, but it may possible that in a future course of time, you may see that any mid-sized IT company may grow to 2000, 2400, or maybe 3000. And you started doubting on TCS. This is really a wrong stuff. TCS capability is far beyond. Of course, sky is the limit, market is very dynamic, technology is coming, and God knows what would happen at any given point of time. So when it comes to Indian IT industry, the large caps are less valued as compared to the mid caps, and forget the small caps. I even do not want to talk about them because they hardly have any valuation. To be honest, guys, we need to be very alert. We need to understand that situation is really changing at the faster pace. Foreign institutional investors are very selective in their stocks, and I really doubt they consider intrinsic value while making a decision. Because of their investments in IT companies, sometimes you will see that the mid-size IT company is like way up, like like this. And you will see that a large IT company who holds a great portfolio, who holds everything, is around flattish level. But the investors need to review the IT portfolio in a very completest way. Because I'm telling you that in the next 5 years, what really matters is the cloud computing. What really matters is the digital analytics. What really matters is I would say, the solutions which the big companies can offer because they have a bandwidth, they have money, and they have huge, global delivery centers. Well, in IT space, we call this at GDC, which is Global Delivery Centers. To cut short this video, in another 1 year of time, you will see that Indian IT companies would definitely have a huge volatility in their stock prices. And I might not be surprised that few selective mid caps might have a better opportunity than the large caps. And of course, the paid and sold media would definitely be pushing few selective IT stocks. So it would very, very difficult for a novice investor to understand whether he would go for a big IT company or he will go for a mid-sized IT company. And in this whole video, I have not named any mid-sized IT company, but take my words, there are several mid-sized IT companies. I don't know how should I say, but their stocks are way above the intrinsic value. And if I look at their sales, their revenue, their top line, their other income, their portfolio, I think all top shots IT companies are having this as a one segment, but this mid-size IT companies like zoom up. Lest you understand how you need to handle your portfolio. This is Rahul Magan from Treasury Consulting Group. You know my personal number, which is +91 9899242978. Treasury Consulting hedge fund desk understand which IT company to invest, which not. We are really not bothered whether any so-called venture capitalist or private equity is investing in this stock and giving a hype, or not investing in this stock is trying to give a pessimist outlook of that stock. Not at all. Remember that a studious student in a class is always discouraged by the teacher. But the end result is the same studious student would end up IAS, IPS, maybe some lecturer, maybe some scientist, or maybe some corporate, and so on and so forth. Have a good time and talk soon.